I want to get some more analysis on the inflation number for the September quarter. Joining me is the EY Oceania Chief Economist, Cherelle Murphy. Cherelle, what's your take on the number today?
Look, that headline number was very good, obviously, coming down to 2.8% back in the target band. But because it's been so heavily influenced by the electricity rebates, both the Commonwealth level and in 3 of the states, it's obviously kind of artificially pushed that number down. So the core inflation number is more important here, and that still stands at an annual rate of 3.5%. So not ideal in terms of getting inflation back into the target band in an underlying sense.
So no rate cut in the short term?
In the short term, I think it's still going to look a little hairy for the Reserve Bank. When we look, for example, at service prices, they're still running really strongly above 4%, more like 4.5%. And that's, I guess, the area of the economy the Reserve Bank can do most about. You know, there are other things in there that have gone up, like cocoa prices, egg prices because of the bird flu. That's obviously not the sort of thing that the RBA can do something about.
But they can on services.
But they can on services, and I think that's just running a bit too high.
So what's your prediction then for rates off the back of today, particularly when we know the RBA is meeting on Melbourne Cup Day next week?
That's right. Look, I think that they will stay steady at this point in time, both in November and December. And that's really the policy of least regret. The RBA doesn't want to cut too soon and risk refueling inflation. So I think if it gets through summer, looks again at the numbers in February, and if it sees that underlying inflation number start to come down a little further, it's going to feel more satisfied that that's the time to put in place a rate cut.
Given the underlying rate is still 3.5%, is there an argument to hike rates now? Get it done sooner rather than later?
No, I don't think so, because it is coming down. It is behaving largely in line with the RBA's forecasts. And in fact, potentially, you could argue it's actually beating the Reserve Bank's forecast a little bit. In other words, it's coming down a little faster. They didn't have a 3.5% core number until the December quarter of this year, and we've got that in September. So I don't think in here, unlike my esteemed colleague Warren Hogan, that there is anything to suggest a rate hike. In fact, I think that they'd be quite pleased with this, but they're just not quite there yet.
And would you suggest that February is a possible rate cut?
Well, February will be the first meeting of 2025, and it's not until the 17th of February, so it's a little later than they used to do because of the new schedule. So we will see, I think, something probably in the first few months of next year. February would be my pick at this point in time.